Hi, welcome to the Market Alert for Thursday, the 12th of January 2022. So yesterday, once again, stocks and bonds ripped higher. Yield curve inversion deepens ahead of the most important CPI print ever. I suspect it will be, actually. We'll have to wait and see, though. Stocks and bonds rallying quiet. News flow ahead of CPI. And the US extend the gains with catalyst light ahead of US CPI. Just keep moving up, don't they? So today, CPI preview. As inflation keeps cooling, this is what the Wall Street will be looking for. If CPI comes in soft for the long-only community, we'll officially label it as a string of soft data points, as shown by that graph there. That means it's going to continue to cool off. And flawless indicator signals big CPI tomorrow. This is one that JP Morgan has, I think, isn't it? Predicted to surprise correctly in 10 of the last 10 prints and points to downside surprise in CPI tomorrow. Well, it's easy to do, isn't it? When you just tell the Treasury, look, or the statistics department, can we have this cooling off a bit, please? It's completely detached from the real world. We all know that. So it's going to be interesting to see what happens today. So it's like it says here, place your bets. Over the past 10 years, never has the S&P been so negatively reactive to an economic indicator as it has been in the case of 2022 to the CPI numbers. Well, they'll be out today, but it's amazing, isn't it? As I keep saying, you've got this backdrop of war, cost of living crisis, recession, strikes. It just goes on and on. And yet we have something else to add to the mix now. The US to hit debt ceiling 1 week from today, starting countdown to epic chaos. It's popcorn time according to this, because they're going to have to print even more money to keep it all afloat, and the stock market goes up. So adding all of those other factors that I've just mentioned, and now this into the mix, it's incredible, isn't it? So what's going to happen? Well, it'll probably rip higher, won't it? That's what it's going to do. Going to send the markets up to those all-time highs. So today, the only thing that matters now from this point forward is CPI, because that's the only thing that they've got to say. Well, actually, it is transitory, and we can see this now. We're over the worst, and it's going to move lower. This is out at 1:30. So, like I say, get your popcorn ready, because it's likely to send the market lower, then bring it all back, as it's done for the last goodness knows how many times. And we'll see what happens. But exasperating, because the fundamentals don't point to any of these stock gains. But then, as I said before, you've got to trade what you see, because if you try and trade against it, it's just financial suicide, because it just doesn't want to go down. It has no intentions of going down, and it can't go down unless they change the narrative and decide to start selling to move it lower. It will go lower at some point. There's no doubts about that. But at the moment, you can just feel there's a sense about just wanting to get back to those all-time highs in the short term. So in the implied volatility, yesterday, the day before, we had 1668, and we're up. Even though the market was up yesterday, they've priced up some of the options. So again, it's just whether that's just a case that some of the shorts are out, I don't know. But they certainly loaded a bit more in yesterday, just in case. As can be seen there, so 1742. But we have got this sort of base in place for a correction. Depends on this number today. Could easily send it much lower if the CPI number has cooled off. You could see, we saw the market move on the NFP numbers, 850 points on the Dow on Friday of last week. So, who knows? Who knows? It's pure speculation till those numbers come out. One thing we do know, that if they do come out lower than forecast, they're fudged, because none of us are seeing any decrease in prices, that's for sure. On the 6 month, again, you've got the similar picture there, just got that move to the upside starting, and then on the 12-month one, again, as I covered in yesterday's alert, you can see that sort of base area that we've got building there. Right, let's move on, have a look at the stock markets, and we'll kick off with the Dow. So in the Dow, we traded up to the 62 yesterday, right to it, and overnight the market showing a little bit of weakness there. So let's have a look at the 30-minute chart. We traded down to the high, as I've said before. The low and the high are really important, particularly in a bull market. and in a bear market. But what you want to see is the market find support at the high and the close is there and the 50 EMA, and then off we go. And the market's got the new high where it's traded up to overnight already. Found a bit of selling there and is now just moving lower. And I would expect this market to trade in a sideways range during today, unless it gets leaked. But otherwise, it's going to trade sideways, isn't it, until the CPI numbers are released at lunchtime. In the German DAX, well, there's no stopping the DAX, is there? War in Europe, market up. That's how it works. And off it goes again yesterday. We've now moved in the last week, well, that's less than a week, isn't it? We're just over a week of being back to the markets being open. Let's just go back to this low, though, and just draw in, see what we've got here. We're up to 1,150 points now in a matter of days for the German DAX. And like I say, we're not that far off when you look at the monthly chart to the all-time highs. Just do a quick ballpark figure from here up to here. We're looking at 1,400 points. That's nothing. We've done 1,150 in the last few days, haven't we? So, there's another couple of weeks or whatever. If they continue with this nonsense, then the markets are going to get back to the all-time highs. However, as with all these things, it's not a prediction. It's just a way that it sort of feels at the moment. This is what their goal and objective is. And as long as the economic data points towards everything being fine and dandy, then they're going to use it to their advantage, aren't they? That's all I'm saying there. At some point, we will see a resumption of the market correcting. It needs to correct, and the implied volatility is showing that base around that 16% area to do so. Where are we off to? 30-minute chart yesterday, down at the 50 EMA, DP just below it, market up, just continues to move up. Another 150 points yesterday. In fact, just under 200 points, 175 points yesterday for the DAX. Continues to march ahead. Hasn't taken out the high of yesterday overnight, unlike the Dow did. Got back to it. But then all focus is on the US markets, isn't it? For today, 5-minute chart overnight, stuck at the close. And there, as you can see, that's the high for yesterday. Just have a look at the market action during yesterday. We were sideways in the morning. Again, we've got this pattern at the moment. It's not taking off at the start. It's consolidating and then moving higher, which you see there, and then just undulated back and forth as it made new highs during yesterday. And then in the evening followed the Dow as it ripped higher, and overnight is just sideways at the moment. In the S&P, you can see that we've through the 50%. We're stuck at the 200 MA. This is going to be an important area today for the S&P at 130 with those CPI numbers. 30-minute chart, again, you can see sitting sideways, moved higher with the DAX, and then this is when the S&P officially opened, and one-way bet all the way to the upside once more. In the FTSE 100, there's no stopping this either. Yesterday, up once more. Inside overnight action at the moment. We have a look at this yesterday. We traded down to the psychological level of 7,700. And then we went up about 80 points before we had a pullback to the 50 EMA. And we got the high just below that. And then they brought the market back up. At the moment, we're nowhere near yesterday's high, but we are sitting quite comfortably on the close. In the monthly chart of the FTSE, you can see we're still heading for that 7790. That's the next upside target, followed by 7903. GBP JPY is sideways to lower, again waiting for those numbers today. I'll just whiz through this. You can see yesterday they're just sideways, but overnight Asia's moved the market lower down to the S1. Need to get back up above yesterday's low in order to maintain any sort of up move. In the pound, also got a bit of an ascending daily highs there at the moment, but no doubt today is going to determine its direction. Yesterday down to the low, market comes off the low, no surprise, get your retracement, and off we go back up above the close in the DP. Overnight, market is sitting on the DP at the moment, again waiting for those CPI numbers. So in the dollar, finding a bit of support overnight there, sideways to higher at one point yesterday, and then down slightly overnight. 30 minutes on the dollar. You can see they're moving to the upside at the moment. It was down yesterday, and interestingly enough, if we have a look at silver, the market was down. So that's an interesting one. It seems like silver's under the cosh at the moment, as is gold. 30-minute chart again. Yeah, you got the London fix stuck at the high. Down she comes. So yeah, I managed to bounce back though. It's looking fairly strongish. It keeps bouncing back at the moment, and it's still above that 23.50. Another joke, isn't it? You know, silver was $50 in '79 and 2011, and it's less than half the price. And we've got inflation. Work that one out. Gold up also above its 1981 high of $800, I must admit, but silver nowhere near. Certainly undervalued. And the 30-minute gold chart, again, yesterday the market hammered down, trades to the low, comes off the low, and then moves back to the upside. Notice how it had to drive through the high, as they probably tried to hold the market in the smaller time frames, but hammered it lower, came back to try and get back above it, and then just had to go out to the downside, and then they brought back in there. Okay, that will do it for this one. So get your popcorn ready, 1:30, see what happens with these CPI numbers, and whether the market rips higher once more. If those numbers do come out lower, they're going to use it to their advantage, and they're going to rip it, seriously higher in the Dow as well, just as they did with the non-farm payroll numbers, which actually came out slightly higher on Friday. But then when they did the revision within 5 minutes of releasing the figures, they were allowed to move the market up 850 points thereafter. Okay, that's it for this one. Like I say, get your popcorn ready, 1:30, see what happens. As ever, thanks for watching. See you in the